Minuteman 6 here for Minuteman Precious Metals. Please like, share, and subscribe, and ring that bell icon for new content. I recently read an interesting article from James Hyerczyk. Market awaits CPI data and Powell testimony. Will it break out or correct? And that's what we're going to talk about today. It really points to the significant volatility next week as market drivers could push gold and silver higher or lower based off Fed testimony, CPI and PPI data. For me, that means that we should be cautious and look at next week's news and signals for higher and lower pricing. And we should probably hold off on our purchases. Gold soared last week to record highs, driven by escalating trade tensions, inflation risks, and uncertainty over Federal Reserve policy. Persistent fears of a prolonged U.S. China trade war, coupled with hawkish Fed signals, kept investors piling into metal as a hedge against economic instability. This week, traders will closely watch U.S. inflation data via the CPI and PPI reports, as well as Fed Chair Jerome Powell's testimony on Tuesday, February 11th, both of which could indicate significant gold price moves. With the rally showing signs of overextension, the risk of a short-term pullback is rising, but overall sentiment does remain bullish. These are factors that could swing gold higher or lower. The first of those is tariffs. The tariff battles have reignited as China decided to hit back against us. Gold's latest leg higher was fueled by renewed U.S. China trade tensions. President Trump imposed fresh tariffs on Chinese goods while granting a temporary reprieve to Mexico and Canada. In response, Beijing introduced retaliatory duties, including a 15% tariff on U.S. liquefied gas. This trade, liquefied natural gas. These trade disruptions have fueled inflation concerns as higher import costs threaten to keep consumer prices elevated. With the Fed already cautious on rate cuts, prolonged tariff battles could delay policy easing, further supporting gold's appeal as an inflationary hedge. A second factor is that the Fed has stood firm on inflation risks. The Federal Reserve held its benchmark this month at 4.25 or 4.5%, emphasizing the need for sustained progress on inflation before considering cuts. There we go. Bond markets reflected this uncertainty with Treasury yields holding firm. The 10-year yield edged higher, signaling investor skepticism over near-term rate cuts. Meanwhile, the U.S. dollar remained resilient, limiting gold's upside, but failing to derail the broader uptrend. Fiscal demand has struggled as prices have surged. That's our next factor. We've seen this from several factors. I constantly watch Vermilion Enterprises and their channel. They often talk about the differences in between the retail sector and the central bank buying, and I think we're seeing that now. Gold is extremely high; it's at all-time highs. So we're seeing less demand from investors, and those are all investors. Investors here in the United States, demand is just down drastically. But even in India and China, demand has really dropped. The Perth Mint has reported its lowest gold sales in 10 months. But central banks like the People's Bank of China, they're continuing to buy. So we have this discrepancy where the retail investors have basically stopped buying, but we still have this strong central bank buying at this time. So that leads us to the last factor for the week, the one that I think will really increase volatility, and that's the CPI data and the PPI data. So this week we've got Jerome Powell. His congressional testimony will come out. That'll be a key catalyst along with that CPI and PPI data. So a stronger than expected CPI or PPI report could reinforce the Fed's cautious stance, limiting near-term upside for gold. But any signs of disinflation would fuel expectations of earlier rate cuts. And that would, of course, trigger gold prices and silver prices to break out. So we could see that $3,000 gold very soon if we have that happen. So gold's uptrend, it remains intact right now, but it is in overbought conditions. So that suggests that we should probably see a pullback if data skews to the hawkish side. Key support levels should be monitored for potential dip buying opportunities, and traders should brace for heightened volatility as inflation figures and Fed rhetoric takes center stage. So again, next week, there's going to be a lot of news out there, and that news, it's going to skew one way or the other. So we could see gold shoot significantly higher, pulling silver with it as well, or we could see a drop back to probably around the high $2,700 range if we see that hawkish news from the Fed. So let's wait and see. Right now, I would hold off on buying. I'm personally holding off on buying for a couple weeks until things start to level out one way or another. Of course, I always try to buy dips, so I'm looking for those opportunities when they come. So hope everyone has a great week, rest of the weekend. Enjoy the Super Bowl, and we will talk to you later. Minuteman 6 signing out.